Hey everyone, it's Rich Warner from the Smart Investor Models YouTube channel. Glad you could be with me again today. Today I'd like to talk about two reports that I put out on a regular basis for Smart Investor Models subscribers, and it is the monthly Real Reward to Risk Bond ETF Rankings Report and the weekly Treasury and Credit Yields and Spreads Report. You know, we're coming around to the end of the month again, and in the week prior to the end of the month, I like to do a review of all the major actively traded bond ETFs out there. We track 80 different bond ETFs across the risk credit spectrum, starting with US Treasuries, corporate A's, corporate BBB, high yield, CLOs, senior loans, bank loans, agencies, emerging market debt, and across the maturity spectrum as well. It includes plain vanilla index funds for each respective bond sector, as well as the active bond funds. For instance, the BlackRock iShares BINC, B-I-N-C, managed by Rick Reeder and Company. Then we have also CGMS, PYLD, PIMCO, and a few other actively managed bond ETFs as well. But what makes this monthly report so special is that by the end of the month, you're trying to determine which area of the bond markets should I invest in to get those juicy dividends at the beginning of each month. And so in order to get those dividends, you have to own these bond ETFs typically as of the last trading day of the previous month. So what I like to do for my own bond portfolios, and I think it's useful for all investors and active traders as well, is to rank all of those 80 actively traded bond ETFs by their real yields divided by their volatility or their risk. So we're really trying to maximize real reward to risk here. By ranking all of these bond ETFs by their real reward to risk ratios, we can quickly narrow down the field to those bond ETFs that are most attractive, especially going into the dividend period at the start of each month. In addition to the table ranking in this monthly report, you also get a scatter plot, which highlights in the northwestern quadrant, those are the bond ETFs that you should be focusing on because they offer the highest real reward divided by risk. And also, the Smart Investor Model scatter plot will also highlight that part of the chart where bond ETFs aren't quite cutting it. They're not offering enough real reward relative to the amount of risk that one assumes. And so those are the bond ETFs that we want to avoid. So I find this table and the scatter plot quite useful. It's a great solid starting point, and it can keep you out of a lot of trouble. So the other thing I'll say about it is the way we calculate volatility risk. It's not your standard deviation approach, which is like a point to point, based on the closing price every day, every week, every month, every quarter, whatever. The problem with the standard deviation approach is that it only focuses on those closing points at the end of a given period. And so it misses all the range that a particular security, has experienced during a certain period of time. And that's why the extreme high-low volatility method is actually much more accurate. And if you want to read into this or do some research on that approach, I think it was invented by a guy named Parkinson, and it was also developed in a book which I read many years ago by Richard Bookstaber. At that time, he worked for Morgan Stanley. He was an options trader, and he relied on the extreme high-low volatility calculation methodology, which is a lot more accurate in terms of estimating risk for any given security. So that's the approach we use for the volatility part of the equation. And you get this monthly report, you get this table ranking broken down into 4 tiers. The top tier, those bond ETFs offering the highest real reward relative to risk. The B tier, the C tier, and the D tier is probably that list of bond ETFs that you want to avoid, because these bond ETFs in tier D don't offer enough return for the amount of risk that one has to assume. Okay, so in addition to the table ranking, the scatter plot, you also get a summary of the key observations. So it's quite a handy tool to have, and I highly recommend it. You can access the Smart Investor Models monthly real reward to risk bond ETF rankings report by clicking on the link below this video. It's a monthly subscription and it's well worth your consideration. Now, Smart Investor Models also generates a weekly report called the Weekly Treasury and Credit Yields and Spreads Report. I was thinking about doing a daily version of this as well someday, but for now we've got a weekly report, and it shows you the real sector yield curves. So imagine all the various yield curves you can think of according to credit class versus the US Treasury curve at the bottom usually. Well, actually the CD curve is about the same as the US Treasury yield curve. It may be even a little bit lower in some cases. But who invests in CDs anyways these days? I just offer the CD curve as really a means of comparison. And I also highlight on the real yield curves key points of interest. So those real yields that are really offering decent spread over the Treasury curve, for example, would be of interest. Sectors that are just hugging or too close to the Treasury curve just would not warrant the attention of most investors. Okay, in addition to that, we have, of course, the US Treasury yields history with yield curve shifts over time. And as part of the weekly report, we have the credit spreads over US Treasuries as well. For agency debt, corporate A-rated debt, corporate BBB rated debt, this is investment grade level. And then finally, the high yield non-investment grade 5-year OAS. That would be average maturities of 5 years or so over the Treasury curve. How is that spread doing over time? And at the end of that report, we also offer key observations about new trends that you should be mindful of and any new themes coming to the fore. So those are two reports that I think would be very helpful for bond investors, and they're worth checking out. Again, I will have links below this video, so you can just click on the link and you can get further information, and then you can hit the subscribe button if you'd like and sign up for these services. Okay, that's all I have for now. And if you enjoyed this video, please consider subscribing and liking. That would be greatly appreciated. And I also welcome your ideas as well, your comments, suggestions, and feedback that I could use to generate or to improve some of the reporting that I'm doing, topics of discussion that you'd like me perhaps to cover in greater detail. In my experience, I co-manage bond portfolios for institutional investors. And so over the years, I've picked up quite a few insights that I hope I can share with you over time. So I look forward to hearing from your comments and suggestions. This is Rich Warner again for the Smart Investor Models YouTube channel, and I look forward to seeing you in the next video.